Federal Reserve set to signal plans to keep raising rates even as inflation eases. US dollar hits reverse gear as Fed cedes rate rise driver's seat. How Jerome Powell's ego could trigger a recession. Hey everyone, this is Chris. Welcome back to the channel. This is your daily news. So I want to start with some charts here. Take a look at this. This is essentially where the Fed has been raising rates. You can see this quite different than what we've seen in the past. And so for those of you who think, oh well, Bitcoin was awesome in the past and Tesla was awesome in the past. Well, the past was really quite different. Interest rates were low for several years. You guys can see that on the chart. It's very easy to see. And now interest rates are going up. So I do expect things to slow. However, what is going on with inflation, this kind of thing? So this is sort of the bet that some people in the market are making, is that inflation is peaked and it will come down, and then theoretically the Fed will cut rates. Now the Fed hasn't given any indication of that. They're going to be meeting soon, and I don't think they're going to say anything like that at all. So who knows what the market will be thinking? I think they'd be crazy, in my opinion. The Fed generally wants the inflation rate to be around 2%. It's around the 5% range as of now. So we'll see what's going on. But the overall sort of projection that everyone's saying is, and the Fed included, has been saying about 25 basis points of what we'll be seeing in the February meeting. Also, too, we've been watching unemployment. Keep an eye on this one. Essentially, I think unemployment is going to go up. I've been talking to this and warning you guys for a long time. It is still about 3.5%, which is quite low. I expect unemployment to be around 5%. And basically what's going on, and I mentioned this several times on this channel, a lot of big companies are laying off, but it's not every single company out there, just many companies. And always the best way to protect yourself is have the job skills to where companies want to hire you and want to pay you money. That's basically what it boils down to. Now, January has been a crazy time in the market. Stocks have been rallying. Essentially, stocks don't move in a straight line. What goes down sometimes it comes up, and what goes up sometimes it comes down. That's basically what we're seeing. And in fact, if you bought the dip on the 50 worst performing stocks in the S&P, 48 out of those 50 are up on an average of 17%. So this has been quite a rally from theoretically the bottom, but we'll see. I'm just saying, the worst performers are been coming back. However, we do have earnings this week. There's some big ones, and this is essentially going to say, hey guys, are we making money? Or hey guys, are we not making money? So Spotify and Snapchat are on Tuesday. It looks like Facebook is on Wednesday. And then also then you're going to have Amazon and Google and Apple on Thursday. So a big week for earnings. Man, I tell you, it is a tough market to read, but when in doubt, you just want to diversify yourself so you're not competing all to one thing. And I think that's a big mistake that a lot of people made, is they just put too many eggs all in one basket. And it's never a good strategy in any economic environment, to be perfectly frank. However, one of the things that we've been watching on in terms of economic environments is what's going on in China. So they are reopening, and this could be a couple of different things for the market. Depends how you want to read it. So one is, with the reopening in China, you're going to have more demand for oil, right? So that could put the cost of fuels could go up. The other thing too, you could have essentially more consumer demand. Now, on the positive note, you could say China opens up, you could have some relief in sort of demand by giving more essentially supply, right? The factories can open up, these kind of things. So this is sort of why we watch China all the time. And we're also concerned about the growth in China. So take a look at this, for example. This is China's GDP. It is growing, but it's definitely slowed from where it was. And essentially the estimates are like, maybe China's GDP will grow from like a 3% on the low end to maybe 5% on the high end. And, it's anyone's guess, of course, what it's going to be at, but it's not what it used to be, right? Back in, I was in Beijing teaching at Tsinghua back in 07, 08, around the time of the Beijing Olympics. It was an exciting time to be around. And at that time, too, you had like double-digit GDP growth. However, now you have China, economy is slowing, and also too, their population is in decline. Now, if you ask Paul Krugman, who essentially got a Nobel in economics, he's like, inflation may not be coming down as quick as people think, so not so fast market, according to Paul Krugman. And then if you ask Mike Wilson over at Morgan Stanley, he's like, I'd be real careful here. He's expecting more downside ahead. He remains bearish. I'm bearish as well. It depends who you ask, of course. And again, it just depends. Is your company that you're interested in, are they making money or not? And that's certainly why we're watching earnings. Now, if you take a look at the past, you guys can see this for yourself. This is sort of how stocks have been doing in January in the past. So 2023 had a great January. 2022, not so much. 21 and 20 kind of flat, and then 2019 was up. So it can be all over the map because sometimes, you like to say, okay, this month is always good, this month is always not good. But you can see January has shown us different things at different times. Regarding, though, who is having a bad January, I can tell you it is clearly Adani. They're just getting killed out there. Essentially, Hindenburg came out with a short report, and you can take a look at this chart here. Basically, the shares of his companies have just fallen off a cliff. I mean, the worst of it has been like 40% on the month. So not everyone is having a great month of January. And Donnie is certainly a loser of that. Speaking of cuts and things going down, in fact, I was seeing this both Ford and I believe GM is in there as well, as lowering prices of EVs to compete with Tesla. This is a thing, so I understand the Tesla bulls are saying, oh, we're going to decrease prices. Everything can be so awesome because we're awesome. But it doesn't really make sense how that would be awesome because essentially, if you have to put something on sale, that means the demand is not there, right? I'm not just making random stuff up. At any kind of store, you put something on sale because you can't get people to buy it at the higher prices, right? However, to be fair, some people did buy the Teslas at the higher prices, and said people now that prices are lowered are pretty ticked off. And there was a couple of quotes in here where people were like, I just can't trust Tesla anymore. I just feel like, I got cheated. Because essentially what it is like you bought a car and, you could have paid like, say, $5,000 more than what it costs just like a week later. And it's just like, you just feel kind of like a dummy and cheat and stuff like that. And I don't think there's refunds, this kind of stuff. You guys know how this stuff world works. And essentially, there's going to be a price war in these things, and it's essentially going to lower the margins for all of these companies. So, anyone out there who tells you that there's going to be, oodles of cash for everyone, I just don't see it. I just don't see how like having lots of competition, everyone lowering prices would be necessarily a good thing. But if you have a different view on that, please let me know. I'd love to hear why. Also, too, we're going to be looking at Apple. Now, this was an interesting article. They were saying this is the first revenue decline since 2019. So basically, every year Apple's revenues go up because they keep making more money, selling more stuff, et cetera, stuff like that. That's the first time we're going to have a slowdown. And a couple things that are going on. So one is PC sales are down. iPhone sales are down, and sort of the kicker is going to be what's going on with their streaming services. Are people signing up for Apple TV Plus? Are they getting the Apple Sports, stuff like that? And are people still buying stuff on the App Store? So Apple is a pretty big indicator of what the market is doing. Also, how consumers are thinking, and frankly, everyone has Apple in their retirement because like just about every fund out there has got Apple in the portfolio, and because it's just a stalwart of a company. I'm sure you guys know that. It's interesting though is what's going to happen with Facebook. They're a really interesting one. I think you'll hear different people say different things. And so, at one point, Facebook essentially was dominating everything in social media, and they kind of just lost favor. Mostly, in my opinion, they got a bit greedy, right? So they're just taking money from anyone and everyone, and just let anyone make accounts and let anyone advertise on there, and it becomes a problem because you have a lot of fake accounts, and essentially it's just a lot of sort of shady advertising. That's a good way to put it. And the other thing too, what's interesting about Facebook / Meta is they changed their name and sort of like put this focus on trying to build up the metaverse, which may or may not be a thing. Zuckerberg could be right. He could be, totally could be. I myself am not necessarily willing to take that bet because I just don't want to wear the goggles. But to be fair, maybe younger generations do, and they say, Chris, you're a dummy. Roblox is the future. We're all wearing goggles, etc., and we're all going to be building, buildings in the metaverse, and that might be true, but probably without me. So that's my opinion on that. But I will say, they still do make money over there. Just that the investment in metaverse, I question. However, I do know that they do make money at Facebook, and we're going to find out how much money they, in fact, they do make. The people, though, regarding money, it turns out that U.S. consumers are struggling as of late. As you can see the headline here, the U.S. consumer is starting to freak out, and there's a really important chart to look at. So this tells you a couple of other things. So one is it's like, okay, this is when the stimulus checks came out, and this is sort of the savings rates of Americans. And basically this just shows you that Americans are running out of savings. Inflation's going up, and we know that Americans' cars are being repossessed. We talked about it before on the channel, but this is just, it's just really, really clear how saving rates are going down. One of the things that happens with the economy and every rates, everything slows down, and it just takes a while for things to kick in and to kind of figure out where the things are going. So, certainly I wish I had a crystal ball and can accurately tell you exactly where the bottom slash can be. I don't, but we're not like completely blind. Like we have some idea of sort of where things are going. And for me, when I see these kind of things, I just don't know like where people are going to get money to say buy your Apples and your Teslas when interest rates are high, people are losing their jobs, and their saving rates are going down. So that's just sort of what I see. Then the trick would be, okay, so then when is the bottom? When is there going to be a rebound? I lived through the dot-com bubble and I lived through 0809. I don't expect a slingshot recovery. I just think it's going to be, it's not like the world's going to melt down completely, but I don't expect it to go like rocket to the moon like it had in the past, because again, interest rates are going to remain elevated. So we'll keep an eye on these things, and I just want to show you this size of stuff together. That just the consumers are struggling. This is another chart. You can see here it says a share of U.S. adults whose monthly expenses were more than their income. And so basically what it's showing you is that people under 30,000, I think how you read this, 7.2% are struggling because their expenses are greater than their income. And I think there's going to be a further divide in society between, unfortunately, the rich and poor. The divide will get bigger, and also between uneducated and educated. I mentioned that several times in this channel. That's why I talk so much about getting the job skills that you need, because yes, we do talk about investing in the market and stuff like that, but you got to have the money in the first place in order to do said things. And it's funny regarding said things. When you have that little bit extra money, you want to go out and have some fun. Evidently, there's this company out there. And I'd be curious, for those of you who are alcohol experts, please share your thoughts. So there's a product called Fireball, I think whiskey is what it's called, right? You guys can see right here, or Fireball cocktail, something like that. But the point being is that I guess on the label it says like Fireball whiskey, but there is no whiskey in it. This is the mini bottles in the stores, and consumers are basically suing that. They're like, "Yo, you're falsely advertising that there's whiskey in your Fireball." So I'd love to hear your guys' thoughts on this one. If you did know that there was no whiskey in there, it's like, oh, Fireball Cinnamon is what it's called, yeah. And I don't drink this stuff, so I couldn't tell you like definitively if it tastes like it or not. But like definitively, I guess there is no whiskey in this thing. So anyway, that's been your daily news. Love to hear your thoughts on any one of these things, and I'll catch you guys in the next video.